actually comprises of three core pillars. The first and second pillar is very much covered by the previous presenters, being the airline businesses, ancillary business, and the third one comprised of subsidiary businesses. So the first two pillars comprise of our core. What I mean by that is basically airline business, flying you from city to city, flying you from country to country, connecting you at a very affordable fare. We are now in 21 countries, meaning we fly to 21 countries. We have grown exponentially in the last 16 years. In terms of our CAGR growth for AirAsia Berhad, the short haul, we have grown about 60% from 2001 to 2017. You'll see that this kind of CAGR growth is actually not seen in a lot of growing countries. We are now flying to 119 destinations, 282 total routes, and of which 90 are totally unique to us. What do we mean by unique routes? It just means that we have the pricing advantage. No one else flies these routes but us, so therefore high load, high yields, very profitable. We have established 56 new routes in 2017 and 23 hubs. So how are we so successful? Number one, low cost is very deeply embedded in our DNA. And we will keep repeating this model, as you see on the left, for every market that we are starting new JVs in, whether it's in Vietnam, in China, Myanmar, etc. Our second pillar is ancillary. Ancillary contributes 20% of the group's total revenue. As you can see from this slide, we have grown tremendously since 2008, from 20 ringgit per passenger to 49 ringgit per passenger in 2017. So we have more than doubled up. In terms of total ancillary revenue, we have grown 720%, from 233 million to 1.93 billion ringgit. Just to note that the 1.93 billion only consists of Malaysia, Philippines, and Indonesia. The reason why we are only reporting these three is because we have consolidated Malaysia, Philippines, and Indonesia's operations as of first quarter 2017 in terms of profit and loss as well as balance sheet. So it's consolidated as we move towards becoming one ASEAN airline. As you can see at the bottom left, in terms of EBITDA margin, we are higher than the big giants like Ryanair or even Southwest. Ryanair, as of 2017, has 430 plus aircraft within their operations in Europe. Southwest has 706 aircraft within their operations in the US. We, AirAsia, short-haul operations, we have 196 aircraft as of 31st December 2017. But you can see from here, even with the smaller scale and smaller fleet size as compared to the other two giants who've been running these operations for way many years than we have, we are actually a lot more profitable than them. The reason is because of low cost. So, we hear about low cost, but I didn't know how apparent the culture was. So last year when I joined AirAsia, I had to do my first roadshow with Tony in Europe, covering our European investors. Basically, we have AGSS, which is one of our support division that supports all our businesses. They do invoice processing, payment processing, hotel flight booking for us. So being the first time doing this, they booked my hotel for me in Paris. When I checked in, it's on Champs-Élysées. There was actually no air conditioning. And I called Tony at 11:30 p.m. to say, hey boss, this hotel doesn't have air conditioning. His reply was, sleep naked, open the window, and then good night. So that's how low-cost culture is deeply embedded in AirAsia. We have all learned, and this is the reason why operationally we're so profitable as compared to the other airlines. Our third pillar is very important to us. The third pillar comprises digital businesses such as Online 365. Online 365 will be a new e-commerce, new marketplace whereby you're able to shop 365 days a year. Airline 365 will not be the official name when we launch it. We are in the midst of trying to get the URL for this online shopping business up and running. Basically, businesses are able to list their products to sell online. You're able to shop anywhere and everywhere you are. The next one is Travel 360. Rocky is our Wi-Fi portal. So basically, we are targeting to Wi-Fi all our aircraft for AirAsia Berhad and AirAsia X in the next 12 months, so that when you're flying with us, you will be able to browse for your next flight, next destination, shop for whatever you want to buy online, which is Airline 365. And our target is actually not to charge you for Wi-Fi. Right now, if you are using Wi-Fi on board for social media, if you want to stay connected within your WhatsApp or YouTube, we charge you 9 ringgit for 10 megabyte and 18 ringgit for 100 megabyte. But moving forward, the purpose of Rocky portal is actually not to earn money from this charging you the megabytes. It's actually so that when you're flying with us, whether it's a 2-hour flight or a 4-hour flight, you will be shopping online, because we'll allow you free Wi-Fi for you to shop. So apart from this, we also have logistics business, which is a new setup called Red Box. Red Box comprises of, covers you from first mile to last mile delivery. Right now, Red Cargo, our aircraft passenger cargo belly space, carries cargo from one country to another. And because of our ASEAN and Asian connectivity, a lot of companies use us for transporting goods from one country to another, from AirAsia X to AirAsia Berhad. So long haul cargo transported to Asia, and then AirAsia Berhad cargo space will continue to carry the cargo to the next destination. You probably don't know this, but actually Red Cargo contributes 10% of our total ancillary revenue year on year. Apart from that, Spencer and Barry also mentioned about our payment options. Basically, we're trying to take cash off our aircraft so that you can pay everything cashless, with big pay, with big loyalty points, etc. And we also have our Ground Team Red, which is our ground handling service, and we actually announced a JV last year with SETS, which is an expert in running ground handling in Singapore. This JV entails basically us JVing with them. We sold 38.6% of our Ground Team Red for cash proceeds of close to 120 million Sing. You'll see eventually that all these businesses under the subsidiary business will be able to pay our investors a biannual special dividend once every 2 years, as promised by the company. Okay, where are we in terms of competition? For 2017, as you can see, just within the domestic operations, Malaysia has gained almost 8 percentage points, from 47.2 to 54.3%. And this is just for domestic operations. And for Thailand, we have grown 1 percentage point to almost 31%. Indonesia, we are still fairly small, and not because of anything that we did wrong, but it was because Mount Agong decided to sneeze for a good 4 to 5 months last year. So in terms of Indonesia, business has resumed as usual, and people have already gone back to Bali. Philippines, we have grown 3 percentage points, and India has actually caught us by surprise. India has grown almost doubled from 2016 to 2017 in terms of domestic operations. India, as of 31st December 2017, we only have 14 aircraft. And within our domestic operations, we're actually competing with Indigo, who has more than 120 aircraft. And for fourth quarter 2017, India was actually very profitable. So India has grown in terms of number of passengers more than 80% from the year before. And in terms of market share, it is becoming more apparent that our brand is getting very established in India. And Indians are actually using our AirAsia India for their domestic connectivity. So as you see from this slide, that in each and every market that we're in, we have 2 to 3 competitions, whether it's their legacy carrier or a low-cost carrier. Okay, this slide is actually the most important slide. When we announced our earnings fourth quarter 2017 and full year 2017, on the 27th of February, somebody from Bloomberg actually contacted Tony the next morning to say, hey, your net profit was down 1.6%. And I was scratching my head, where did we report any negative figures? The reason is because, as I mentioned in my first slide, Philippines, Malaysia, and Indonesia has just been consolidated first Q 2017. So as a result, you should not, I repeat, should not refer to the first page of the Bursa announcement every time when we announce our earnings. Is because it is not apple-to-apple comparison. The reason why we have bolded actual versus pro forma is so that you know that this is an apple-to-apple comparison. So if you, as a business reviewer, as a business journalist, want to spend 5-10 minutes on AirAsia to write about us, don't look at the first page. Look at note 22 in Bursa. The subheading will say review of group performance. Look at actual versus pro forma. As of 4th Q 2017 and full year last year, on a net operating profit basis, we have gone up 8.5%. And 2016 was actually a record year for AirAsia Berhad in terms of profitability, as well as for AirAsia X. And 2017, we did really well as well. We didn't have a double-digit NOP because cost has gone up, but it was an 8.5% increase in terms of our net operating profit. And later on, you'll see why I keep emphasizing NOP. You can actually disregard what happens below PBT level is because current taxation, deferred taxation, tax amnesty are all one-off items. If you just want to measure how our airline operations are doing, just look at net operating profit. So as you can see here, and net profit last year was up 24%, and we recorded 1.6 billion ringgit. So again, if you don't remember anything I say today, that's fine. Just refer to note 22 of our Bursa announcement. Okay, next would be our growth story. What are we doing this year? Our focus for this year would be obviously strengthening our existing markets. We have 6 air operating certificates, namely in Malaysia, Thailand, Philippines, Indonesia, India, and the last addition being Japan. We've just started our operations in Japan end of last year with 1 aircraft operating, flying from Nagoya to Sapporo. For this year, our focus would be to start our JV in Vietnam in October with likely 5 aircraft. Probably China as well for 2019. For China, we have 2 options. The quickest way is obviously for us to purchase an existing airline that has the AOC certificate for us to operate immediately, or to apply for the air operating certificate ourselves. India has a very peculiar ruling. It used to be 520, meaning you are not allowed to fly international if you, as a foreign carrier, foreign operating inline in India that hasn't been operating for 5 years and 20 aircraft, you are only allowed to operate domestically. However, they have relaxed the 5 to 0. So as long as we have 20 aircraft in India, our 21st aircraft, we will be able to fly internationally to connect into our ASEAN and Asian connectivity, which we are already very well established. So the focus for this year is for India to fly international with our 21st aircraft, for Vietnam to start operations, and to continue to strengthen the hubs and increase the frequencies for our existing markets. For the next 5 to 10 years, where do we aspire to be? We would like to dominate India and China. For this year, we are estimating to carry around 80 million passengers for the full year of 2018. And our load factor target this year is 87%. 20% and to target 20% fly through together with AirAsia X. Basically, passengers that fly through from Australia, wanting to fly to Singapore, can do a fly through in Kuala Lumpur by paying a small fee. This is actually one of our ancillary product as well. And we'll connect you. You just have to go from gate to gate and we'll transfer your bags for you. We are actually, in terms of geographical location, in the best place. Why? In ASEAN plus Asia, the population is 3.4 billion. And we are in a sweet spot because ASEAN geographically, it's surrounded by water and sea. The easiest and the quickest way for you to travel from city to city and country to country is by flying. And when we keep offering you very low affordable fares, our increase in passengers will keep continuing for the next 5-10 years easily. We have a huge order book. Up until 2027, we will be having 500 aircraft, as you can see from this slide. As of last year, here you will see 205 aircraft because we had 6 that was grounded for reallocation and 3 that was actually leased by third party. So by 2027, we will be carrying at least 150 million passengers a year. For this year, we are adding 7 aircraft to Malaysia, to Thailand, to India. Because for India, we're targeting to fly international. So from the sum here, you can see that we'll have 21 aircraft for India, 6 to Philippines, and 3 to Indonesia. In totality, this year, we're adding a net addition of 30 aircraft to our short-haul operations. Why is data, digital technology so important to us? 3 key things. 1, we own the passengers' data. And a lot of companies like Uber and Grab, they spend a lot of money acquiring customers. What we have are customers. We have a lot of customers. So you can imagine, by the end of this year, we would have had at least 80 million passengers who have flown with us, meaning we would have 80 million passengers data. We will know exactly where you went the last time you flew with us, what did you buy, whether you are a leisure traveler or a business traveler. So this is why data is really important to us, because we can sell you what you want, and we can also predict the propensity of you taking up a product. Why data, why technology, and why digitalization? 3 things. 1, cost reduction. 2, revenue generation, which will impact across all countries and all our ancillary products. And 3, better passenger and customer experience for you. This is how our data, digital will impact you as a passenger. We aspire to be the Amazon in the skies. So as I mentioned to you earlier, Online 365 will be similar to Amazon.com, where you can shop online. It will be the Amazon of Asia, but managed and handled by AirAsia. Here's how we make it easy for you, assuming that you click and do a search to fly with us. So from here, you can see that we're actually partnering with all the best practices and best data digital experts such as Google, Salesforce, Navitaire, Workday, Palantir, and Skywise. And each and every one of these processes, you probably won't realize that we're actually partnering with one of the experts to actually make your travel experience very seamless and very easy. So assuming that you click on your last search on a destination, the next time you come back to AirAsia.com, we will actually, the page that you see is actually the last search that you're with us. And then you will book your flight to Phuket via your mobile app. And then you realize, uh-oh, I've got my name wrong. So what you do is you will live chat us to key in your right name. And then you will do your online check-in via the mobile phone. And then you will pick a seat before you check in. 1, 2, and 3 have been highlighted in yellow, meaning right now, if you book a seat and you fly with us, all these will be your part of your travel experience with us. Eventually, 4, 5, 6 will be launched. Basically, you will receive a notification on your mobile phone to tell you which is the terminal in terms of airport that you're departing from, and which boarding gate. So you don't have to spend time at the airport searching for boarding gate information or which terminal you're actually departing from. This will also reduce delay turnaround, minimizes our crew time. So it will provide better crew management. And then while you're in the plane, you notice that your seat does not recline. Right now, you have to file a manual form to say, my seat didn't recline, I paid for an emergency exit row 14, and my seat doesn't recline. Right now, it's a manual process. Moving forward with the help of Palantir, Google, and Salesforce, you'll be able to tell this to our cabin crew. They will actually put it into their device, and you will get a compensation via email notification, and this relieves our customer happiness department from addressing it. So eventually, you'll see that data and digital will also impact you, not just us. Okay, in terms of ancillary revenue, this only comprised of Malaysia, Philippines, and Indonesia. Last year, we have closed 49 ringgit per pax. The internal target that Tony has for us is actually 60 ringgit. But realistically, I would say for the full year of 2018, we're happy to close even at 51 ringgit for these 3 consolidated countries. From the chart here, you can see that the biggest contributor till date is baggage. So we have implemented a 7-kilo carry-on limit baggage as of 1st April 2017. So you are not allowed to carry anything more than 7 kilos. So passengers know us so well that they will purchase their check-in baggage even a day or 2 before they're board, because it's a lot cheaper compared to paying 1 kilogram of excess baggage when you check in. Last year, baggage was contributing 48% of ancillary revenue. This year, we're targeting to move it up to 52%. And how do we think we're able to do it is via ancillary pricing optimization, which will be launched in the second half of 2018. APO will impact Santan, seat selection, and baggage. As you can see from here, the additional revenue from Santan will be about 11 million, which means currently Santan food is about 3 ringgit 40 cents per passenger, and eventually it will be about 370 by the end of this year. For seat selection, it's going to move from 3 ringgit to 330, which is 6 percentage points up from 2016. And for baggage, it will go up by 2.2%. So as you can see, we are using a lot of digitalization to help improve our revenue in terms of selling ancillary. Dolly ePOS is something new. Moving forward, all our cabin crew will be using a Samsung device with an app called Dolly ePOS. Dolly ePOS has the ability to analyze data, has the ability to store passengers' previous purchasing data, as well as predict your purchase behavior. So moving forward, we will know exactly from Kuala Lumpur to Hong Kong which are the alcohol, cigarettes, which are the food items that's popular and that will sell, and we'll remove the items that's not popular. So basically, whatever that we load on board will be fully sold. With this passenger data, we are able to do that. And right now, if you are purchasing a big duty-free item, we deliver it to your seat 48 hours before you board your flights. In the second half of this year, we will reduce that to 24 hours, meaning any time before you take your flight, as long as you allow us 24 hours, you purchase an item on bigdutyfree.com/online365.com, we will deliver the item to your seat. Saves you time from hunting for the item that you want at the airports. Also, with Santan food, right now, if you are traveling, you will need to basically order your food 24 hours before your flight. Moving forward, it will be cut short to 4 hours. In the long run, you'll be able to do this an hour before you board. So basically, when you're idling at the airport, you can actually start purchasing, start shopping, and start ordering the food that you want. Where do we think our ancillary booster will be in the next 12 months? As I mentioned earlier, our cargo business is already contributing 10%, as you can see at the bottom of the slide, to our ancillary revenue. Another new setup is called Redbox, covering first to last mile e-commerce courier, delivering door to door, and business to business, covering business to business and consumer to consumer. So basically, the cargo items will reach our airports, and we will have our Redbox delivering a package, anything up to 30 kilos to your doorstep. We will be using new startup companies to do the deliveries, such as GoGet, Gojek, Delivery, and etc. for the ASEAN and Asian connectivities, which we are tying up with all these startup companies. As mentioned, Online 365 will also cover big duty free as well as the new marketplace. Our target is actually quite conservative, 20 cents per passenger. So once we launch our online 365, we'll be able to see huge ancillary revenue coming from this channel. And Rocky, as I mentioned earlier, we will be Wi-Fiing all our aircraft by the end of this year. So while you're flying with us, you'll be doing nothing but shopping. Okay, why investment thesis here? Why invest in AirAsia? AirAsia is not only an exponentially growth company. We grow year on year at least a high single digit in terms of net operating profit. We have a policy that's put in place. We pay an annual dividend of up to 20% of our annual net operating profit. So if you want to gauge how much we're paying in terms of our annual dividend, again, look at our NOP line, and we're paying up to 20%. This policy has been put in place since 2013, and we have been paying since 2013 up to 2017. 2017, we've actually paid 7.2% in terms of dividend yield. As you can see from this new AirAsia Group Berhad structure, the first two pillars comprise of our airline business and ancillary income business. These two pillars are our core business. The last two are our non-core business, which is when we monetize any of these businesses, we will pay a special dividend to our shareholders. So digital assets, as I mentioned earlier, we've actually incorporated Red Beet Ventures in Delaware, Silicon Valley this year, so that all the digital businesses will be managed under Red Beet Ventures moving forward. Eventually, the businesses will be big enough for us to list in the New York Stock Exchange. So you're starting to see that, as mentioned earlier, we have set up cost centers such as our training center, our ground handling, which all started as a cost center, handling and training our own cabin crew and pilot. Eventually, it became so profitable that 60% of the revenue actually comes from third-party airline. And as and when somebody offers us a really good deal, we monetize. So where do the special dividends come from? For example, 100 million USD was realized middle of 2017. We sold 50% of our crew and training center to CAE. We sold 25% of AirAsia Expedia 3 years ago in 2015 for 86 million USD. We are now in the midst of negotiating to sell the remainder of the 25% for a much higher valuation. Our ground handling, we have received the cash, as I mentioned earlier, close to 120 million Sing, and we have yet to pay the special dividend for this. And our leasing units, for the record, we did not sell AAC. We merely sold the aircraft, 84 aircraft and 14 engines. And we announced this deal on the 1st of March 2018. So from here, you're able to see that why is AirAsia an investment story? We are not only a growing company, we also pay very healthy dividends year on year. I've also been told to cover the new group structure, which we are going through right now as we speak. This is what the new group structure would look like. Basically, AirAsia Berhad has been suspended from trading, so don't panic. We are not delisted for any negative reasons. The reason why AirAsia Malaysia, AirAsia Berhad has been suspended from trading is because we are going through an internal reorganization, delisting AirAsia Berhad and listing of AirAsia Group Berhad. It would be a one-to-one share exchange, and you'll be able to start trading AirAsia Group Berhad after the 16th of April 2018. As you can see from here, in terms of air transportation, eventually, after the listing status completes, AirAsia Group Berhad will own 100% of AirAsia Malaysia. The others do not change. We still remain 49% for the Indonesia operations, which we have listed on the 29th of December via a backdoor listing, listed as promised. For Philippines, we will own 40% of AirAsia Inc., effectively 35% of the Philippines operations. In terms of corporate exercise in Philippines, we are submitting the listing documentations and submitting the papers required this year. So we are looking at an IPO for Philippines in 2019. We own about 14% of AirAsia X, our medium to long-haul sister company. as well as 45% of Thai AirAsia, which is listed under AAV. So you'll be able to see that eventually all these airline businesses will be listed under their local stock exchange. And for investors who actually see the value in our digital businesses, as you can see on the second right pillar, and our support business such as Redbox, AGSS, our ground handling, for investors who actually see the value in all these non-core businesses, they would want to own AirAsia Group Berhad shares because this will give you the exposure to everything that you see in here. However, for insurance companies for local markets that has very limited investment mandate, they may choose to only invest in AirAsia Indonesia, AirAsia Philippines, for example. The next slide will show you how cheaply we are valued by investors and by business reviewers. The global industry average for airline is actually 15 times PE. AirAsia not only pay you dividends much higher than any of these airlines here, has proven track record of our profitability. We are only traded at 8.7 times PE. It has gone up from 7 to 8.7, which is still 50% cheaper and lower than any of the global industry average. In terms of EV, EBITDA multiples, we are only at 6.4. This is also 50% discounted. So you can see here, Ryanair has 91.9 market cap, AirAsia has about 13.9 market cap, but look at our EBITDA multiples, EBITDA margin. We are actually far more profitable than any of these other airlines. So that's it from me. Thank you. I'll pass the stage to Nikunj.